The markets have been marching ever higher, but crucial jobs numbers could shake things up. Welcome to Market Insight. I'm Elena Casas. The S&P 500 and the Nasdaq hit fresh highs again on Monday as November's rally kept driving on. One bump in the road, though, could have come from the Fed. Data out earlier today showed job openings rising in October, and if Friday's jobs report comes in similarly strong, that could reduce the odds on a December rate cut. Well, to talk about that and more, I'm joined now by Nathan Moser, Senior Portfolio Manager at Impax Asset Management. Nathan, hello. To the jobs market first then, could a strong number on Friday have markets pricing in a significantly more hawkish Fed in the new year?
Hi, Elena. It's great to be here. Thank you for having me. I think the Fed wants to cut rates on Friday, and they are definitely leaning in that direction. You mentioned the jobs report. I think that's the last pivotal piece of information that we need before investors can take comfort that they will cut. So if we had a stronger than expected employment report and expectations are north of 200,000 jobs, that may cause some on the Fed to question whether they should cut. Our base case expectation is that they do cut, and then the question will be the pace of cutting for next year. Currently, the market expectation is for 2 cuts, depending how the employment and inflation outlook progresses over that time. That will determine if that's the correct assumption.
What about the risk of the new administration's tariffs pushing up inflation?
Yeah, so tariffs is something that definitely would push inflation. It's typically a stair step higher, and then the long-term effect of tariffs is actually to slow down inflation as the consumer faces effectively a tax. The one thing I will note that investors should pay attention to is a lot of what we're seeing from the president-elect is really negotiating in public. And so you can see markets really aren't as volatile as you would suspect given the proposed tariffs. So really, at this point, it's hard to make definitive investment decisions, and I would caution overreacting to any proclamations.
You pointed out in your notes that the Magnificent Seven tech firms now account for the third of the S&P's market capitalization. Is that sustainable, do you think?
I don't think it's sustainable. These companies are some of the greatest companies that we've ever seen in terms of their growth potential, market position, their cash flow generative nature. But sometimes too much of a good thing is not good. And so I suspect that over time, you will see money rotate out of those highly concentrated positions down market cap. And so that broadening of the market is very healthy for equity markets and will benefit smaller and mid-sized companies as there's just not a lot of market cap for those sales to go into.
Where in particular do you think value-seeking investors should be looking to rotate?
I think small caps, because they're U.S. focused, have the most leverage to that trade. You can see over the last 6 months, small caps have actually outperformed large caps as investors are starting to rotate into the asset class. The Trump presidency potentially will be a tailwind for small caps as well. There'll be less regulation. Tariffs, which we've talked about, actually hurt large cap companies more so than small. And a lighter regulatory touch is a positive from an M&A perspective, which I expect will pick up materially in 2025.
We saw big run-ups in November in some of the more speculative parts of the market. Do you think some are in bubble territory?
There are definitely pockets that are a bit concerning to me. AI obviously will change the world, but we're seeing some speculative behavior in some of the AI plays. Same can be said with Bitcoin. And so what gives me some comfort, though, is that we're also seeing pockets of real valuation support. And so I wouldn't make a broad market call at this point and say that we've gone too far, but there's definitely some areas to be a little bit more cautious about.
Nathan Moser of Impax Asset Management, thank you so much for that analysis. And that's your Market Insight. Don't forget, you can watch more videos on Reuters.com.